I'm going to have two separate higher quality recordings. Start recording, and welcome everyone to the Working Sessions Trading Foundations. This is where we come to talk about whatever it is that you need to make your foundation stronger. That's it. There's no agendas. Well, sometimes there are, not today. The agenda is the market. The agenda is, can we do some posturing beginning to end? Draw it out on a chart? Absolutely. We'll start with that because that's going to lead us to, is anything changing, or are the fundamental parameters of the market holding up? And I think that's a good starting point. If you're in trades, if you're thinking about trades, certainly we want to talk about that. But I think if we go through the posture and the watch list, that's going to take a good amount of time. That's going to answer a lot of questions, and that's the right discussion. So if there's something else you want to do, please flag it. I think we'll have time, and then we'll go from there. As always, the disclaimers, here they are. You know the rules. I'll leave them there for 1 second, and then let's go score some things. So let's bring up, okay, so there's the futures. The futures are down 0.4 on the S&P, 0.2 on the Dow, 0.6 on the NASDAQ, 0.7 on the Russell. We said that nothing about what's happening now is going to entice us. We need to watch, evaluate, see what we think. I'll tell you, at one point today, I'm like, yeah, the buyers have done all they needed. Then by the end of the day, I'm like, oh, have they? So that's what's happening now. In the we just finished. Graylin asked a good question. So I was gonna say we just finished the after hours session from 4:00 p.m. until 8:00 p.m. Eastern Standard. There is an extended hours trading session where, and you can participate if you trade stock. You can sign up, and all the brokers connect in an ECN, an electronic channel network, something of the other. And essentially it's an order matching system. So if I have 100 shares and I say, I want to sell this, but only if I can sell it for 75. Someone else out there says, I want to buy, but only if I can buy it for 75. It's like, it's like a dating app, right? They're like, ding, 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 we have a match. And they basically just transfer the shares, transfer the money, charge a commission. It's a non-market transaction, but it does mark the price. And that price is what, when we watch after an earnings announcement and you watch the after hours, they're like, oh, this is up after hours or down. That's what's happening. The fact that it's up or down after hours means that the limit orders have moved higher or lower because the demand or the supply is increasing, right? Where they're like, oh, these earnings are bad. And so people are like, oh, I want to sell it down here or sell it up there. So that's what's happening, right? With those prices after hours. You won't really see the if you come into Yahoo Finance, because that's happening, they don't really track the futures yet. You can just sort of go look at the after hours quotes for individual stocks. After that, so right as we start, that's when you'll start seeing the people reference the futures again. What's the importance of that? Not much right now, other than curiosity. Now, here's some level of importance, okay? Yeah, because at the end of the day, we'll have the overnight, then we'll have tomorrow's pre-market, and then by the time we start up, it could be completely different from what we have now. So it's not like it's like, oh, this means it's going to be up or down. A lot of times when we hear futures, we think, oh, does that mean they're predicting the future? No, it just means those are for future delivery. Those are just a contract that speculates on price going up or down. So it's but in the after hours, that's all we have that's trading, which is then what we use to reference what's the market doing now. Now that the extended hours has closed, we can, so I always tease and tell people when I can't sleep at night, my dog wakes me up, I'll pull my phone out and I'll look at the futures. And the although this looks like let's see, 8786. Hold on, there we go. Says down, but it actually looks like it's a positive candle. I don't know, but this helps us to see. So we had a big selling day, a big selling day, a big selling day, and then we had today. Now in the SPY, it went up much higher and it held on more. So let's go look at that for just a second. Here's today's market, SPY. Okay. So a little bit different. Same thing. We had the same 1, 2, 3 down days. This one's a little bit more holding on. At one point today, this thing had almost gotten back up to here. But we gave a lot of that back. Now, here's the deal. When we look at this day right here, it's a white candle with big volume. So who do we give that to? To the sellers. That's a selling day. We closed right there on this day, and we closed here the next day. That dropped this far. That's one of the biggest drops you'll find. It was off the lows, but it was a sell day by a far amount, right? So that's definitely a sell day. Today, we're going to give the buyers credit for one day back, but it's only one. And if tomorrow there's another bit of volume and it goes up like this, I'm only going to give the two of these together compared to this, 1-to-1, right? We're gonna be a little skeptical here with buyers. We have to be convinced. We're not gonna just be dumpster divers who think, is this the bottom? No, let's make sure we're real convinced of what's going on here, what it means to us. We did get a positive day. That was on our cocktail hour. If you missed it, we hung out for a little bit. We said, all right, what do we think tomorrow? Positive day. I said, I definitely think we're getting a positive day. And I was looking for more positive towards the upper end of today's range. We came back more towards the bottom of the range. We were positive, but we gave back a lot. So it was bullish, but there's some concern about how bullish it was. If I think in terms of consolidation, I'm starting to think maybe I can look at something like this, and if at any point it goes up, pulls back, and doesn't get back down to here, I'll be pretty content with that, actually. We don't have that yet. We're not sure yet. So I don't know. First and foremost, Graylin, does that answer your question about the futures? Just it's a reference point after the market for us to just, if you're looking at if you're doing your evening routine, you probably want to just take a peek and be like, hey, what's happening right now? Because if right now it's down a little bit and then tomorrow morning it's back up a little bit, you might think, oh, okay, they shook it off. Okay, so let's go through the posture. Let's talk about it. The scoring, what it means, etc. So the long-term trend, 2 points. The way you want to think about it is like this. Let me make sure I have a good... let's go pink. Now, the first thing, and the pre-markets, whatever the pre-market is like, where are we now as we are about to get into the market? So we can look at the overnight futures to be like, what happened? Did it keep going further? Did it start to go up? But at the end of the day, the pre-market and the pre-market futures, those are the most important things for us. Okay. So our long-term score, we're at a 1.25. What would I expect that to be right off the bat? So the longest, the biggest we'll see typically is about 45 or maybe less. And then I can just kind of fill in the gap right here, and that's going to be my 1 and come down here. That's a good representation right there. What we're doing is we're trying to, as we look and we say, this is my trend right here, right? We're saying, oh, okay, let's draw. Let's connect the dots. And then we'll measure over here and say, what do we think this looks like? And say, well, it's not as steep as a 2. Looks a little better than a 1. So I might say this is a 1.25. Right? I don't care if I'm closer to the bottom, closer to the top, if I'm going up or down at the time. All I want to do is have the best representation of the current long-term trend, because this is indicative of institutional, the institutional foundation. If it's a bullish foundation, I tend to look for that to continue. That's the 3-year weekly that we're going to be using, and we're going to be zooming into. Like, we're not, a lot of times people think that means we're looking at the left side of the 3-year than the right side. No, we're trying to find the most relevant part of that chart. Then we're scoring it. Then we're kind of measuring it according to what this is here. So this is your scoring mechanism, right? Now we go to the chart. We make sure we're on the 3-year weekly. What's important to us? This was important to us back here, not now. That was back in 2022. Yeah, that was negative. That was a bear market right there, if you're wondering. We were 30% from high to low in that situation. Then we had this trend here coming out of that, and we scored that a 1. And then it started to accelerate. Well, actually, then we went through this, and I think we might have lowered our score a little, but then it came right back into the trend and we raised it back up. And as it started to break out, we scored it to a 1.25. And then as it continued its breakout, we scored it to 1.5. So you can almost trace the progression. And hopefully, as I now take my lines off, you can see, yeah, that trend indeed accelerated, right? Up until when? Oh, right about now. So you'll notice we have this score here. And now what are we thinking about? Well, we already scored that it broke. The only way that I'm going to score it again negative is if it takes out this low and makes a lower low. Because even if it stops right here and turns, that's a new low. And that's higher than this one. It's not as expected, though, right? That would cause us to start to think, oh, I'm going to end up drawing a new line potentially. Where if this comes back up and comes down, we might think, yeah, this thing is more like this. That's much different. That's not even as steep as this one where it was a 1. This is maybe a 0.5, a 0.75. It's bare. But all of it, if I ever have a trend that's like this, that's a 0. It's going sideways. We don't have that. Right? Now, hopefully that's making more sense. Here's the other thing. We are more likely and quicker to score things to the bullish side than we are the bearish side. And that's just because fundamentally markets are more bullish than bearish. They are in bull markets more frequently and they last longer in bull markets. So we never want to be overreactive to be like, oh, now we're bearish. Now we're bullish. Now we're bearish. Now we're bullish. Now we're bearish. No, that's not the objective here. And hopefully you can see over the last, right? So our tenure as a group starts right around here. And you can see that coming out of this, the posture was still a bit tepid, right? It was a bit tepid back here. Well, yeah, we were coming out of this. That was nasty. We got a higher low and we were starting to see some signs of life. But this is right when our posture really started to move into 3, 4, 5. And then it got good during the summer. And then we had this correction. And then it was great. Then our posture in this period of time here, this is when our posture was 6 and 7. Back here, I would say it was more 5 and 6. And what happens is, during this time, it's going to ebb. It's going to come down. By the time it dropped to here, the lowest our posture got to was a 0, just to kind of have a sense as to why at 0, we were still able to transition bullishly very quickly. I don't want to be bearish right when this good market hits. That was an amazing market. We have to be ready for that. Same thing back here. Here, the lowest our posture got to was like a 2.5. Our posture dropped to that. I don't want to switch. We would have missed this. This was a great run right here. These periods, this is 2 months. This is 3 months. This is 3 months. Those are great windows. Now what? Now we're still thinking, what do we have in front of us here? It's a little bit more volatile. But if by the end of this week, let's say at the end of this week, we end up right back here like this, it just gets a little more bullish. Yeah, that's going to be really hard. I'm going to leave my score right where it is because I'm thinking, hey, this could be fine. The intention of the process is to keep us understanding market conditions so that we can make sure we dial our strategies in. We're not overreacting. Even when the market overreacts, we see things developing. We're mindful of how we manage our risk into the conditions. That's it. I mean, this isn't, certainly no one is telling you that I am teaching you a crystal ball. That's not what I'm doing. I know that, you know that. This is just a good organizational system that helps trigger when we're like watching these things every week. Well, when an abnormality shows up, that's going to flag us and we're going to be like, hey, what's going on? This is out of the ordinary. We talked about that with the VIX and you saw how it played out, right? That concept of VIX escalation, it played out exactly. And now we're looking to see, does it play out the other way and give us the sign that says, oh, this thing's over. Giddy up. Institutions are back on their horse, so get on yours. That's the objective here. So, yeah. So what am I now? Well, we lowered this 1/4 of a point because it broke down, but until we see the end of this week, we may not know. And for me, even if it is where it is or higher right now, I doubt I change my score at all. I'm just going to be like, oh, okay, we got a little bit of recovery. What happens next? We don't want our long-term trend score to be jittery, if at all possible. We just want to be fluid with it. So that's where I am now. I would say that the score could possibly drop. Let's see. Could drop to a 1, could stay at 1 1/4. Could it get to a back to 1.5? If it goes all the way back up to here, yes. I just don't see that happening. But if it got all the way back up into its prior trend, then I would say, oh yeah, let's get that score back up. The buyers were unwilling to let it fall below that trend. I think it's likely to stay where it is, but a lot could happen this week still. Long term questions. I see we have a lot of, like, this is perfect because there's a good group of people who I would say are more new than not. So this is your chance. If you have the question, someone else does too. So that's the scoring process. Now remember, it's an empirical number, so it will go negative. It's a -2 to +2. That's what this number right in here means. This number. If you see Now, you would have to say this is the worst I've ever seen. That was negative, but not the worst I've ever seen. I think maybe one at -1. Maybe it got to -1.25. I don't even think it did. I mean, that was never that steep. What did I mean by 5 and 6? That, Gray Lynn, great question, is the total score, right? So the total score is on a scale from +10 to -10. That's all of these. If you had the greatest market you could ever imagine across every component, your score would be 10. If you had the absolute worst possible conditions you've ever seen on every component, you would be a -10. Now, I don't think I'm trying to remember because I've changed some components and different things, but it doesn't ever get much above like a 7 or below a -7. A 6, 7, that's very bullish. We're going to trade bullishly. Chips on the table. I'm going to look to anticipate more. I'm going to be more forgiving, and I'm not going to close trades when I normally might. Give it some room to come back. Right? I mean, everything about, think about the old saying, everybody's a genius in a bull market. Well, yeah, after the fact. How many of them know they're geniuses at the time and know, hey, this is a great market, so you should open your risk levels. And then they also know when they stop being that genius, right? That's the problem. That's what we're trying to say. Hey, when we recognize it's those conditions, it's so funny, you guys. I could go back over a 20-year coaching and mentoring career. And just over the, I've seen bull markets, bear markets, sideways, whatever. And as someone comes in and I always will say, hey, tell me what you've done, right? Like, give me some history. If they start to talk about like how they've done and they're like, oh, I did great. And then it got a little harder. I was like, oh, I didn't know what I was doing. I could literally be like, it was a funny trick. It was like a little parlor trick of mine, right? Because I would be like, oh, let me guess, you started trading around the second week of March. And they'd be like, how did you know? Right? Because I could go back and I could look at the conditions. And I could see where the market was going up nice and smooth. And then all of a sudden things turned sideways. And then I could see where they would have given all of it back, right? And so it wasn't that they did something right and then they did something wrong. It's that they were bullish when the market was bullish, and that was right. So I guess to some extent, then they were bullish when the market was no longer bullish. So they, as a blade of grass, they got greedy. They're like, I want sun. They stood up, and the lawnmower is like, shoo. And that's it. And that's trading. That's the description. That's all we need to know. So the point is, do we know when it's time to duck? Right? When is it time to say, hey, I don't expect to make a lot of money right now because I'm not willing to put myself in much risk. And I'm not willing to put myself at much risk because these conditions are not conducive. That's it. Right? You get to the dock and it's a hurricane. You're not like, I came to fish. I came to fish. So that's what we're doing. Is we're reading those conditions to say, all right, what are our thoughts here? We knew our numbers were going to drop this week, right? We knew it was going to drop. This week, meaning what we're seeing now, that's not so evident. In fact, right now, we'll see. Like Monday was nasty for sure. But we could come back from that still. We could see it. Or remember, we might be looking for it. So here we dropped, from here to here, we dropped 3/4 of a point. Then we dropped 1 1/4, which was worse. Then we dropped 1 1/2, which was worse still. So conditions continue to erode. Overall, though, our bullish trend is still intact. We just saw that on the long-term chart. That's one of the things that is like us saying, hey, relax. The institutions have not broken ranks we have held still. There's concern, but not panic. So we should not be like, oh, what are we gonna do? The sky's falling, and the institutions are like, meh, not yet. Short-term trend, even. Things have turned down. We've seen this. The volume's been nasty. That's one of the things that's got us the most concerned. So that's the first one of the first places we're looking in these market transitions is the volume. So if this week we had bad volume on Monday and then we get good volume on Tuesday and good volume on Wednesday, and we say, hey, those cancel each other out. The more we get a wash, the more we move closer to a zero, which is better. We're not expecting that the buyers are just all of a sudden going to take control of anything. We're saying, hey, do we start to see that shift where buying pressure continues to come in? Not yet, but that's one of the things we're looking for this week. Major market. The small caps have really given it back. I got to expect this is going to drop again. Another quarter of a point, it seems. Nothing has stabilized there yet. So I think so far, stay the same. Ooh, that'll be an interesting one. Maybe worse, stay the same. Maybe better. A little worse. Sector rotation and the VIX. Though the VIX has come down quite a bit. We'll go look at that. So let's go through each one of these one at a time to keep going through it. First time I actually understood it, could see a trend that wouldn't surprise me. Okay, a bit more than I expected. Bob, if you didn't hear, I said exactly the same thing. If you came in a little bit late, like exactly the same thing. I was like, whoa. Like, yeah, it came heavy, right? For sure. That's a great read, though. Love it. Okay, so let's look now at it's still holding, right? And we don't even know yet. That's the thing. This candle is alive still, right? Meaning it could still come up. It's only 2 out of 5 days. It's only 40%. But yeah, it does seem like it's easing up for sure a little bit. Let's go to this short term now. Yeah, that's not great. I laugh. It's not great. That's our second. So there's our first dip. You can see over here it was really just one dip, and then we just sort of fought our way out of it. That's not what's happening here. This was abrupt. It's if you remember the correction from August, September, October of last year, it was just kind of steady. It was weakening. This was more violent, which to me makes me feel like it's more of an overreaction. Right? I mean, we got close to 10%. Let's see how close we got. So we went from 560. I'm going to just use this as our standard. Other people may use something differently, but we got down as low as 510.27. 510.27. Divided back into 565. 16, that's fine. Oh, Scott, what are we doing? Divided by 565. What am I doing right now? I'm trying to measure the depth of this retracement. From this high to this low, what is the percentage? I mean, that's basically it, right? Can you be, that's a period, 9.7%. Can you be dogmatic and be like, that's not a correction? The NASDAQ definitely has, as has the Russell. Yeah, I'm going to say that's corrective. We hit it. Now the question is, are we done? That's the watermark. But we're still well off of this. So my thought here is, can this get back up at least near this range? Now, we already touched it a little bit today, but I think it needs to do it a second day. I don't think it needs to go above that. If it got into that dotted line range, for me, that would be okay. It doesn't need to. The question is, this is something that I call it a sneaky reversal. A sneaky reversal where it doesn't necessarily convince you. At what percentage range is considered a correction? 10. Gray Lynn. Good question. 10 for a correction. At 20 is when we go into bear market territory. So you'll hear me reference like a consolidation, which is just like a 3 to 5% retracement versus a deep consolidation where it's like 6 or 7. So yeah, I look at this as a correction. It's 9.7. That's a correction, right? We all agree. None of us are gonna be so dogmatic that we're like, no. It doesn't matter either way. It's not like if we call it a correction or not, anything changes in what we do. We're still waiting for the same thing, and that's evidence that buyers are regaining control and taking over this thing, right? So sometimes I may not be convinced. I'm going to draw this in blue. So you might think about this line like this, and you might think it hasn't broken it. But if all of a sudden when it comes back down, this is what I mean. If it comes down for, let's just say, a couple of days, and then all of a sudden it turns, that's still a higher low. And we're going to see confirmation of that on the VIX as a lower high. And remember that was the exact confirmation back here that gets this. We're not trying to call the bottom. We didn't try to call the bottom yesterday or today. We're not like, oh, that's it, we're getting in. That's not our objective. Our objective is, are we convinced the sellers are finished? We think there's enough underlying bullishness remaining that if the sellers lose control here, then it's admittedly it's a bit of a bastardized version of an inverted head and shoulders. But it's the same concept. So for me personally, if I see this and our posture still hovering around 2.5, right in this area, yeah, let's go. I'm definitely going to put some bullish trades on. Short term is 6 month, 1 day. And, it tends to be like really right now, we're really keyed in on the most recent period of time. And what we're doing right now, so thank you for steering me back to the conversation at hand. Because this is where it's so tempting to just be like, oh, this is now negative. So I'm sure you're going to score it negatively, Scott, right? No. This is where the process is admittedly biased to the upside. If you go back and listen to recordings in here, I will say the same thing. When it was doing this, and it's like, hey, it's easy to think, should we be getting negative on our score? And I'm like, no. I'm not going to do that because it's biased. What we're doing right now is we've moved to a point scoring system, points. And by that I mean we're watching to see we scored it down 1/4 point here because it broke through. Now let's see, I think we scored 2 things. We scored a lower high right there, right? We scored a lower high, so it lost 1/4 point. And it had a lower low right here. So we scored that a -2.5. Theoretically, this is still the same lower low. It got much lower. And because it got this much lower, I'll probably say, yeah, let's dock it another 1/4 point. Unless it gets all the way back up into here. If it's back up here by the end of the week, then I'll be like, I don't know, I'm going to leave it as is. If the trend stayed now, okay, so there's a good question. So yeah, if we see this thing pop back up and then come down and then pop up and then come down, something like that, then that'll start to see us moving towards a 0 score. Yes, exactly. Right, but if we were super reactive with our short-term score, it would be like, you're a -1, then you're a +1, then you're a -2, then you're right. And I'm sure you can, as I say it, imagine how that's going to impact your trading. And it's not positive, right? We want this thing. This is an anchor. This process is an anchor. Horizontal channel is a 0. In the short term, we're going to go a little steeper because it's a short term. It doesn't have to sustain as much, right? But the problem is, this is where this is an anomaly, is we're not drawing this and saying we're scoring that. Whenever it first breaks the bottom of a channel, we start just doing point deductions until we're really convinced. So this is going to be a good one to talk about, because right now, if someone just came in and they're like, hey, if you're scoring it, why aren't you scoring this negatively? For the same reason we didn't score it negatively here. Now, if it comes up and then it comes down, right, then we're going to say, okay, that's another lower high. At that point, so if you look at our score now, where are we? It's not like we're far off. We're at a 0.5. So you can see this thing has come from a 1.75 to a 0.5. Right now we're on pace to be at a 0.25. And if it has another lower high, a 0. So at that point, even though it looks down, we're more like a 0. But if it then veers sideways, we would leave it at a 0. If it starts to move back up, we'll let it get bullish again, because we know, if you remember, one of the things I said is we don't want to miss the first couple of moves. Look at the size of that one and that one. And then the next one was just a little smaller. And it was only 3 moves, this one. If we get a 6-month window, we'll have 5 or 6 moves. But we can't wait until we're like, oh, now I'm ready to go. And then it's like you get one small move and then this thing dies and you miss these great trading opportunities here. So it can come this quickly. And we're saying, hey, if this thing comes up, comes down, doesn't get back to these lows, then we're going to see this. Now, am I like, hey, let's bet the farm, everybody. Let's get as much on the table as we can. No, this is where we're like, I want some chips on the table. I want to get in the action. Then on the second move, I'm going to get more on the action. And as it continues to convince us, we continue to boost our overall risk management. So this one's a little harder right now. When we move into transition, that's the way I would describe it. What we've done here is we've moved into a transitionary market, which means we know the score is dropping, but we don't want to overreact. So we're just sort of tempering how we score this to the downside so that we can recover from it quickly. I don't want my score to whipsaw, based on the choppiness that we can see in here. This would have been hard to get in and out of. You would have been late getting out and late getting back in. Okay. Yeah, we have a couple more minutes. Let's do volume and then we'll take a break. I see some people popping in. Welcome everyone who's coming. Right now, we're just discussing market conditions, which makes sense based on what the market's done the last couple of days. We're doing it by kind of going on a comprehensive review of market posture. So if you're late, we've already talked a little bit about the trends. As of right now, I would say I'm leaning towards this score not changing. And it has some possibility to go either way still, actually. This one I think is going to change. It's going to drop 1/4 of a point is what I'm thinking as of right now. Volume. Now, remember, with volume, we're going to change this to a 1 month, not 30 days, 1 month daily chart, which means I have about 22 on average. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. 22 days. That's a month. 22 days. If you ever wonder where the time frames for our sector rotation and major market come from, 22 days is a month, 66 days is 3 months, 6 months, right? 133, and then 200 days is essentially about 9 months. So that's the rhythm. 9631. What platform am I on? I'm on Thinkorswim. I'm on the Thinkorswim desktop desktop software, not Thinkorswim online. If you're ever going to use Thinkorswim, don't use the online version. Download the actual desktop software. It's worth it to learn, in my opinion. Other people use other platforms and they like it. Steven uses TradeStation, I believe. Sandy uses Interactive Brokers, though not by choice. Unfortunately, she's somewhat relegated to that based on offerings in Australia. By the way, Sandy, was Australia sad at that women's bronze medal rugby game? Whoa, what a finish, huh? I changed the default as far as like the color scheme, things like that, or the charts. Yeah. Yeah, I like light more than dark. It's funny because at first I was forced onto dark and I didn't even know I could change it. Then I was like, I don't like this. And then I loved it. But then I was doing webinars and people are like, I can't see dark. Can you go back to light? And I'm like, fine. And I hated it. And then I'm like, now it's on. Whatever you're used to be fair. You know? Anyways. What tab to change it? If you go, let me remind myself here. This is charts. If you go into the setup at magical second screen, yeah, and you go into application settings and you go to look and feel, you can see in here you've got these color schemes, old school, TOS, dark, light, things like that. And that'll impact everything, including your charts. So yeah, and then you just apply settings and go. It's funny, for a long time I didn't realize it was there. I only knew how to change it on like the startup. So funny how like you look back at the way you use software. Okay, let's hurry and score. We need a quick break. We've been going a little too long. Volume. What am I doing here? Actually, you know what? It's gonna take a minute. Let's take 4 minutes now. Let's take 4-minute break. I'm going to put my slides back up so if anyone comes in, they know we're starting back up. Let's take 4 minutes. Stretch your legs. Use the bathroom. Get a drink. And we'll come back in working sessions. We're processing the market. We're moving on to this. So give me just a minute. I'm stopping the first recording, and we'll be right back. Thanks, everyone. He's supposed to be coming to fix the sprinkler. No, why? All right. Boom. Break over. Let's get started. Welcome back. And for some of you, welcome out. I think I might still have that. Do I? Maybe I don't have the fan. Nope, I don't have the fan. Yeah, I can show that. Absolutely. How many screens are most popular? So it's funny because, yeah, I know people who love 4. I have 2 big screens. And they're not enormous screens, like 24-inch screens. Like, not like someone's like, oh, I got a 40-inch monitor. I'm like, how do you even see that? I like to be able to look at one and work on the other. I like to be able to move things around. I think it's a personal preference, but 2 is minimum, I would say. If you're on one screen, it's so hard to, move it. I'm sure if you're with 4, you're like, how do you live with 2? Right? But, yeah. Okay. I started the recording again, so we're off and running. Welcome to the working sessions, intermediate, advanced session, but this is really just ongoing, so nothing's changing. I'm still Scott. It's just a little later in the night. These are still the disclaimers, and we're still going to the platform, so magnificent. What are we talking about? Real quickly, we're going to take one step back and just talk about, a scoring mechanism. So if I were to quickly define, I have to give it more room because I have 2 intermediary points, right? I know my line's not fabulous there, but this will give you a good sense. So I'm thinking 3, 2, 1. So when we were in this trend here, we had been calling that about a 1.75. You can see it was very close to that. This can get stronger. It can be stronger than what we had there. So that's kind of the fan where, as you draw it and you have your dots and you connect your lines, once you have your line the way you like it, you'll be like, where does this thing sit? Now, remember that we're orienting more to the upside than the down until we get into a convincingly bear market. So right now, people are like, wait a second, Scott, how are you possibly scoring not a minus? How are you possibly scoring this a 0.5 right now? Because right now it's just losing points. It lost it here, it lost it here, it lost it here, right? So it lost it here. So as that's happening, we're taking it away, and it can earn those points back if the buyers start getting higher highs and higher lows. Then it's like, oh, let's give it a quarter point, give it another quarter point, until we see whatever the next discernible trend is. I would say right now we don't have a discernible trend. We have some transitionary price action. We're waiting to see what it transitions to. So we're going to be somewhat flexible, fluid with our scoring process. Hopefully that makes sense. Let's go back down to the 1 month daily. Wrong chart. 1 month daily. And what are we trying to identify? Anything above average, okay? Anything above average. Let me get a little bit more room here. Now you can see, where's my above average times? Can I draw a rectangle? No, I can't. Okay, so I've got these 2 here. I've got these 3 here. I've got these 3 here. Whoops, cut that one off a little bit. You get the gist of it. And then I've got all of these now. All of that's is scoring and will be scored, although, by the time we get 3 more days of market, this drops, this drops, this drops. So this over here on the left is all the way over, which makes it stale. And it cancels anyways. We have a buy day, then a sell day. We really don't care. All we care about is this over. This is what we have, and this is what we're going to have for a while. I have 3 days here. I consolidated it to 2, so I gave that 2 X's. I would say this one here is X, X, check. Now, what do we have? I would say we have a check here, an X here, an X here, an X here, check here. What am I doing? I'm finding any above average volume days, and I'm giving it either to buyers or to sellers, or I'm going to say it's a wash. Everything in here, other than just the fact that these 3 days only, I mean, you can see that these 3 days literally did less than half of what this thing did, although it finished here. But still, right? So that's why I'm only giving it 2. So 1, 2, 3, 4, 5, 6, 7. I have 7 sells, and now I have 4 buys. 1, 2, 3, 4, 5, 6, 7, and then 1, 2, 3. Sorry, that's too many. I lied. That's a lie, Scott. 7 to 3. Is that what we had before? Was 7 to 3 or 6 to 2? Anyway, that's about the same. If we get one more buying day this week and it goes from a 3 to a 4 and it's a 7 to 4, I'm gonna say, oh, that actually goes up a quarter of a point. Instead of a minus 0.75, which is where we are now, I'd go to a minus 0.5. So as the imbalance from sellers to buyers diminishes, we start scoring it closer to 0. And when we start having more buying days than selling days, then we score it in favor of the buyers. So that's all we're doing here, is saying when we have, why did I X a buying day? So Graylin says that on 7 to 2, oh, we've got one there, one here, one here, and we just got one today. So that's the third. Now, this one, let's getting ugly. Let's isolate next to the last X. Next to this one here. Is that a buying day? Let's talk about it. Do we consider that a buying day? If we measure from open to close, that was a buying day. But we are measuring prior close to this close for this exercise, right? So even though this candle was off of the lows for the day before it closed here. And then the next day it closed here. So it dropped this much. And on Monday, right? Remember, you're talking about Monday. Think about the headlines you read on Monday about how much carnage there was. That wasn't a buying day. That was a white candle, which means we were off of the lows because we gapped down 4%. 4% we gapped down. We only ended up down 3%, but we were still down 3%. Yes? That is what we're trying to evaluate. So it's always from close to close. If all we see is the candle, it can be misleading. We need more context. It's a great question because you'll see this. And there'll be times where we give a red candle a positive score for the same reason. It gaps up, doesn't do anything during the day, but the gap up is what mattered most. So right now I would say the volume is set to stay the same. If we get one more buying candle, then I would actually say it's going to improve. And that's where we start to see things stabilize, where We're like, well, if we drop a quarter of a point on the short term, but we raise a quarter of a point on volume and everything else stays the same, we might have the same score. And that's meaningful to us. I'm not predicting that. I'm just saying that's what we're keeping an eye out on. Okay, let's keep going. So that's volume. Let me know if you have any questions about volume or if that covers it. That's the first half. Now we have all of this. Our thoughts are probably going to stay the same. Here, drop here, stay the same, maybe increase. So right now, it looks like we're only going to drop a quarter of a point on the first half. Well, that's better than we've been doing. So if that's where we start to see stability, great. Major market. Major market. This link is found in the resources. Let's start over with a reload. Okay. What are we looking for here? So this is where I was saying we're 200 days, so we're about 9 months back. This analysis is taking the Dow, the NASDAQ, the Russell, the S&P based on their ETFs, and they all start right here at 0. And then it says, what did they do? They all dropped a little, then they all raised up. You can see that back here it was the small caps, and then they came back down. And then it was pretty steady and dropped. All right? And so this is just showing us who's leading, who's lagging, what's going on. Well, the NASDAQ was the leader for the majority of the time, and even now after this retracement is still the number one, right? If we look at the Russell was holding up for a minute, and then it gave it back, but still ahead of the Dow from this time frame at least. There's the S&P. It's our watermark. It's kind of that middle ground of broadness. And then here we have the blue chips down at the bottom. Never really got exciting in here like the other ones did. So it hasn't given back as much as the other ones did, conversely, right? Okay. Now, that's it. This provides us some starting context. Now we drop to 133. That's 6 months. Same analysis, but we've now restarted the 0 point. This is no longer in October. Now it's in January, late January. Now this is where everybody starts at 0. And what happens, right? And you can see we had that surge right here in the small caps, but now we've given that back. Okay, where are we at the end of the day? We have the Russell, or we have the S&P in the lead, then the NASDAQ, then the Russell, and then the Dow. Okay. I mean, is that like wildly bullish? No. Does it hold up that our bullishness is still intact? Yeah. Yeah, I would say so. Now, you can see that the Russell has fallen back below the market, which is, something that we were paying attention to. So could this score drop to a 0.5? Yeah, maybe. We'll see. Okay, let's drop this down to 66 days. So we were at 6 months. Now we're going down to 3 months. Same analysis. We're starting here at 0. You can see what was good, what wasn't. And right now, everything is kind of right lockstep. Overall, though, the Dow is still in the bottom. The NASDAQ still holding up to the top. It's been a correction, but it's been a broad-based correction. It wasn't a defensive realignment correction. That's what we're looking for here. Do we think things have fundamentally shifted, that the market's now more defensive? No, if we did, the Dow would be moving into a leading position, and it's not. It's not. But I want you to notice that the Russell has fallen back into that. We had this race. We were watching this race for so long. Right? We were a 0.5 because the NASDAQ was leading the whole way. But that was as strong as we were. And if we ever thought that the Dow was going to come in, we would probably lower our score. But ultimately, we thought, hey, look, it's the Russell that moved into that leading position, so we raised our score. At this point, I think we'll give that back. So I do think that this is likely to drop 1/4 of a point. So I think our market posture is still likely to drop 1/4 to 1/2 point this week. But that's still stabilizing when last week we dropped 1.5 points. So it's not always the number, and it's not always even like, week to week. It's the trend of the week to week. Is it expanding or contracting? So there are some subtle parts of the analysis, but like I said, if what we do is not subtle, if everybody does what we do, then why would we expect it gives us any kind of an edge? We're trying to find a process that helps us see things just a little bit sooner. And that's where it provides an edge. I hope that as you look at what the VIX did and how we talked about our concerns with it and how they played out, you can see that, we want to see things that's just a little subtle and a little bit different, but hopefully just a little earlier is my thoughts. Okay, questions about this? As of now, like I said, I think it's going to drop. Now, if you're ever confused about the score, like I'm not sure if I'm going to go this way or that way, we'll go to 22 days. Or we just go to 22 days in order to say, hey, what's going on? On 22 days, this actually is quite hopeful. The Russell, despite the fact that it's given back that everything, it's still ahead of everything else. It's still ahead of the Dow. And even though the NASDAQ has had this full correction down to this point, we know that the last time it went like this, the opportunity was born coming out of this correction. So overall, I'm still going to keep my score at a 0.5. It's still bullish, but it's not a 0.75 bullish. It's definitely a 0.5 bullish. Agree, disagree, thoughts, questions, concerns. Let's keep going. That's major market. Sandy, good to see you. Always glad to have you. Have a great night. Hope to see you in the morning. Or have a great morning. Hope to see you tomorrow night. Here is the sector rotation. Same analysis, you guys. Everything about this is the same. Starts at 200, then we drop it down to 133. Then we drop it down to 66. Then we drop it down to 22, and that's the progression. We're looking to see strength and momentum as we move through those time frames, right? So we come in here. What's the starting point? Financials is still holding up as a leader. Utilities as a leader. So that's one defensive and one growth. In here we have communication services. Industrials, those are both growth sectors, and we have healthcare, which is technology is not too far below. So yeah, it's rattled, but overall, more than not, growth sectors are towards the top. Energy's way down here. Materials are way down here. Oh no, that's discretionary. Man, I'm misreading this. That's not great. We don't love discretionary coming down that low. Okay, so let's move in now. That's kind of what we're looking for. So what are we looking for here? We're looking for growth sectors. That's going to be things like financials, industrials, technology, communication services, consumer discretionary. We're looking for defensive things like utilities and consumer staples. And then we're also looking at the cost of things that might give us inflationary reads. Things like basic materials and energy. That's what we're moving through here to go through this information. Now you can see as we go to 133, huge concern. Look at utilities spiking back to the top. Huge concern. Energy was at the top but turned over. Financials near the top. So this has us concerned as a second analysis, but we don't score it until we get to the third one, which is 66. Started strong, then it got weak. Now we're here. Who's leading? Utilities. Problematic. We're definitely what's our score here? We're a 0.25. Okay, maybe not. So we're barely holding on to bullishness here. Barely holding on to bullishness. What do we have? I think utilities is going to take it to a 0. Anyone want to weigh in on that? Communication services is still near the top. There's healthcare. Financials is still holding up. Technology is near the top. So, I mean, I'm not going to take it negative, and I may still leave it positive depending on the next 3 days. I may still leave it as a positive point too, because more than not, growth. What's down here? We still have energy at the bottom, materials at the bottom, consumer, the staples at the bottom. Well, the more we see growth sectors leading, the more we're going to score it favorably. The more we see defensive sectors leading, the more we're going to veer negative. So we do have a growth sector, or excuse me, a defensive sector leading, but it's only one, and everything else is okay. So I think right now you can see we're barely bullish, 0.25. We've come down. I could see it staying there. I could see it dropping back to 0. I don't think it would go up. I don't know. So I could see right now our score anywhere from 0.25 to 0.75 worse. But not much other than that. If you're uncertain or just to get a look ahead, we now go to the 22. And that's more concern. Utilities at the top. Materials at the top. Healthcare at the top. Industrials and financials are close but leaving. Staples is emerging. Technology's at the bottom. Yeah, as of now, this is concerning to us. I would say probably gonna drop a quarter point to a 0 the more I think about it. Okay. Questions about that? Definitely let me know. And let's go finish this. Let's take a quick peek at our futures. So we actually start at 200 win some. 200 days is the default, which is 9 months. Then we go to that bottom right hand corner, double click on it, change it to 133. My chart doesn't look correct. Did it change? What doesn't? You have a different reading on the 22 day? I'm all the way to the right, and I have utilities at the top. What do you have? Uh, 200, 133, 66, 22. No 124 in the middle there. We're working off. We basically look at 1 month as 22 trading days. So those are in basically 22-day increments. Other than we start at 200, which I'm curious now. 200 divided by 22, 9.09 months, right? And then we have 6 months, and then 3 months, and then 2 months. That's the gist of it. Yep. No problem. Okay. What else? Volatility. Volatility. Okay. Where's my chart? Sorry, I lost my train of thought. VIX. So, first and foremost, I think this was just an outrageous overreaction between this and this. That was 26 points. You'll be hard pressed to find much in that vein. As far as within a same day. And you'll notice by now we're all the way back to 27. It really never should have been above here, quite honestly. But it was, and it was nasty for a minute. What now? Well, if we have another bullish day, we would expect this to come down again. And then if it has a flat day and then a couple of selling days, it might do this. But remember that right in here, a de-escalation that equates to a lower high, that would be the same right there. That's a lower high. It spiked up. It dropped. Up, down. That's it. Right? So if you look at that day, do we think that's the day that we would want to be more bullish on the market? Bam. You can see that confirmation came perfectly. At the start of that next move. That's what told us this had finished its tumult. So yeah, we're now thinking that something similar may be happening now. If I go back to the VIX, so this chart makes more sense. Does it give us that kind of a de-escalation pattern? So right now, a lot of people are like, oh, the VIX was so high, we're all so nervous. But we should be thinking, hey, if that nervousness reverses, that's the time to get in. Scoring wise, last week we already dropped it. This will be interesting, I think. We already dropped it 1/4 of a point, and that 1/4 of a point was for a higher high. It was for this higher high right here. As of Friday. Then as of Monday, it did this and made an even more higher high, but I don't know. We already scored that higher high. I don't know that that's going to drop. If I've already scored that, the fact that it overreacted so much when it was still in the process of making the same one, I want to hear from you guys. Anyone who feels more comfortable with seeing the VIX, let me know. Meanwhile, my mouse is doing that thing. I figured it out. I solved it. Very nice. Okay. Yeah, we'll see what it does. We'll see what it does. We'll have to wait and see the rest of the week. I think it's going to drop, but maybe 1/4 to 1/2 point overall. Which, if we've been dropping 3/4, 1 1/4, 1 1/2, and then all of a sudden we drop 1/4 of a point, we're like, well, wait a second. That's stability. That's stabilizing. So that's my thought going into that. What does that mean for us? Stabilizing isn't enough. Stabilizing needs to improve. We may start getting some signs as it stabilizes, but I don't think it would move. I don't think we would see signals until early next week. So this is a week of patience and discipline. What would cause the VIX to spike like that? Institutions. Institutions overreacting to the news out of Japan and what it means relative to our probability of moving into a recession. That's what I would say. Okay. That, I know it took the full beginner / intermediate session, but that's the full posture. And, you know, that we'll be able to fly through tomorrow morning when we check in on the posture. We'll go through. But anyone who's new, especially, questions, is it, do you see it? One thing I want to flag is we really are careful to never be where we would call it dogmatic, where it's like, we have to do this. We must see it this way. Our intention here is to objectively look at the market and assess it. And if we do it every week, then when we see abnormal conditions show up, we can be like, whoa, something's going on here. We may not know what, but just that we know it, we can alter our plans and our risk management levels. So I want you to notice that we've been talking about lower risk levels for the past 2 weeks, 3 weeks. There's no way we should have been caught off guard and been like, oh, I've got so much. One of the, for you new people, yeah, I'll have these videos posted in the recordings channel pretty quickly, PJ. So look for those to be in the, actually not in the resources, but in the recordings channel. Yeah, you know, us just staying with this objective analysis, our intention is to just simply say, have we considered everything? Are we seeing the institutions? Are we seeing the short-term traders? Do we see the sector rotation and understand how money is flowing? Do we understand the sentiment and if it's changing? And so, yeah, we don't think we have a crystal ball. I mean, I always have my magic 8-ball at my desk. But we have a pretty good process to make sure we're never, right? The analogy I put out is the frog. The frog in the pot of water. And all of a sudden it's like the water's heating up. The water's heating up and the frog's like, everything's fine. And then all of a sudden it's like, oh my God, what's going on? So people right now are looking around like, is this water boiling? What should we do? First of all, no, I don't think the water's boiling. It's gotten nice and warm for sure, but I think we can still just relax and enjoy the soak, right? No need to splash around and jump out and make a mess of things. We'll ease into whatever is next. Talk about it, process it, go forward from there. Check the group downloads and market posture. So the market posture log, correct? That's the resource that needs to change. I just need to alter that link. So yeah, Bob, I'll put that in. I'll post the recordings and change that log this evening as I wrap up, and make sure that I get the recordings posted very, very quickly. Yeah, no problem. So let's just have, for the last 3 minutes, a quick temperature check, because one of our objectives is, if you're new, can you come in and onboard? I mean, it's a lot. It's a moving train, right? The train's moving, but hopefully we're creating enough opportunity for you to feel like, yeah, I can kind of get up to speed and then get on the train and not feel like I'm at risk, while at the same time not slowing down the train so the people on the train are like, hey, we're just not getting anywhere now. That's the delicate balance we're striking. PJ said drinking from the fire hose. And that's to be expected, right? But hopefully what you feel like is you have the resources through the channels and other members through coming to these to process and say, hey, let me ask some questions, through working on the documents that we provide to get through it and say, yeah, I'm gonna get to where I'm glad I drank that fast because now I'm at a good point. So that's the objective. But if there's any time where if you are new and you're feeling overwhelmed to the point that you're thinking, if you ever thought I'm gonna bounce, I want to leave, it's just not for me, pop in, give us a chance to see what would make this group more amenable to working on it. Thinking the train is speeding, but woohoo, okay, I love that. It's a fun train. It's a good train. The company in our car, top-notch company, man. Like this is this is the car you want to be in. The other cars, not nearly as good. They got a lot of chimpanzees in their cars. Oh, we got nothing but professors in our group, professors and the such. Anyways, okay. I do think of Jumanji when I think about it going wild. The original is a movie I watched with my kids when they were younger. I love that show. So, anyways, it's good to see everybody. Let's call it a night. Let's convene in the morning, 15 minutes before the market opens. We'll see what the futures tell us, what we expect from the market, what we think our next signals may be. And we'll be water every step along the way. Thanks, everyone. Have a great night. Happy trading.